Hi everyone. I trust that you're all beginning to wind down and getting ready for the chaos at home come Christmas. As the last message of the year, it's probably worth looking at all that the markets have had to deal with this year, ranging from the horrendous conflicts, the banking crisis in the US, when in March 3 banks went to the wall and started a sharp decline in bank stocks globally. Volatility in the Texas oil price, which peaked at over $91, having been as low as 65, and that had a major effect on inflation, as we have all experienced. Annual migrant levels into the country reached an all-time high of 225,000 as of August, matched only by the over 100,000 Kiwis who left these shores. The election delivered the expected result, and time will tell how this pans out, but my expectation is that investment environment will be somewhat friendlier. It is certainly apparent that inflation is trending lower, in line with that of the US, Europe, and the UK, and although cuts in the official rates may take some time, it is fair to say that pressure is off on the Reserve Bank in regard to needing to hike rates further. We have already seen banks make the move lower at the long end of the fixed rate curve, which is a signal of lower rates to come across the whole maturity spectrum. However, volatility in the wholesale markets could derail this, especially at the front end of the curve. Net interest payments, having hit a low in the second quarter of the year, have climbed ever since, and that can be expected to continue through to the second half of 2024, after which refixes at lower rates will take some of the pressure off of household cash flows. For next year, whilst economic momentum will likely improve, the IMF prediction is for very lackluster growth of only 1%, which is very close to the bottom of developed countries. Generally, 1.5% is hoped for, driven by lower inflation, lower interest rates, and that migration. Tourism as well. However, there is a risk that inflation will take longer to cool down, so I do not expect the Reserve Bank to start cutting until it's comfortable with the outlook. And our new Prime Minister is already worried that he has indeed inherited a recession. Westpac is expecting house prices to rise by 8% in 2024, mainly as a result of demand due to net migration. New building consents actually point to a powerful potential lack of supply as well, down some 17% between August last year and this. I'm not sure that we will reach their prediction, but we are certainly seeing the green shoots of recovery in the property market. If we would wish to discuss this in more detail, please feel free to give me a call. As for KiwiSaver, active management styles will be a key requirement as the markets navigate the volatility of the various markets. We're already seeing the better managers increasing their allocations to the bond markets, for example, which is a major beneficiary of expected declines in interest rates. To give you an idea of the quantum of that benefit, if you take a bond delivering, say, 7% return under current interest rates, and if rates drop by 2%, that return increases to over 13%. Hence my preference for active management, where these sort of asset allocations are managed vigorously. In conclusion, household budgets should be scrutinized for spending on wants versus needs. Debt reduction should be at the forefront of the correct mortgage structuring, and will continue to reduce the exposure to interest rate volatility. Investments in property and/or shares should be viewed as a long-term commitment, and please feel free to contact me if you have any concerns, hopefully prior to making any rash decisions. As at the time of making this video, we do not have a release of the new government policies, but it does seem likely that the bright line, aka the capital gains tax, will be shaved back to 2 years, and that interest deductibility will also be phased back over a 2-year period starting in April 2024, where instead of moving to 25% deductibility, it will be maintained at 50%, with 100% coming from April 2026. Have a great Christmas and a new year, and thank you for all your continued support of SurePlan Financial.